Hey, it's Elliot and welcome back to a new video. Today I'm going to share with you what I think are the 5 biggest mistakes made when people start trading. So this video is targeted mainly to people who want to start trading so you don't make these very common mistakes whenever you start. So the first and biggest reason for me is the lack of knowledge, okay? So many people will learn a few stuff on internet and go ahead on the live market to trade their own money. But you need to realize you are in direct competition when you are trading, let's say FX, you are in direct competition with other professional retail traders that have been doing this for years, so that would be my case. You're in competition with institutions, you are in competition with brokers, you are in competition with so many other people. So do you really think that by having your literal 2-day experience and the knowledge you managed to acquire through internet, you are going to make money on this market? And obviously the answer is no. And believe me, this is something that reoccurs many times, okay? People that do not have the proper knowledge only learnt about support and resistance, some moving averages, and think they know it all and go ahead on the trading market. Now, I'm sure you've heard that 85% of traders lose money. But what you need to realize is that in these 85%, there's a big chunk that come from people with no knowledge, no experience, and just come in to try the market, okay? These people are counted in those 85% of losing traders. So it's not as difficult as you may think, but you should not be part of these people that just go into the market with no knowledge. Now, the second mistake you should avoid when you start trading is having no risk management, okay? In trading, risk management is a key part of your results, of your strategy. So whenever you get into a trade, you should always know at which point you will exit that trade, whether it is in profit or whether it is in loss. And if it's a loss, you should never be surprised, okay? Whenever you get a loss in trading, you should know exactly what that loss is going to be, okay? Surprise is your worst enemy in that game. Now, I'm sure some of you research risk management a little bit, but it's not as simple as just using 1% per trade and that's the end, okay? There's so many other things. There's drawdown management, there is position sizing, and risk management is a very complete part of your trading plan. And that brings me to the trading plan. So the third mistake you should really avoid as a beginner trader is having no trading plan. So I'm 100% sure that if we went and asked losing traders what was their plan on the market, they would just look at you and wonder what plan are you talking about. However, every profitable trader has a very specific plan they are following every single day. This trading plan will discount your entry rules, it will discount your risk management, your requirements to enter a trade, and so many other things. Now, the fourth big mistake you should avoid when trading is trading with your emotions. There's actually a very cool social experiment that had been done where there were 100 traders and each had to take trades, okay? So you would expect 50% of people to make money and 50% to people to lose money, because at the end of the day, the market either goes up or down and you can either buy or short. However, what the account balance showed was that 80% of these beginner traders that had no clue what they were doing lost money compared to only 20% making money. So how is that? And that comes down to emotions, okay? The fact that you have greed and you have fear. So managing your emotions when you trade is something very important, and I actually made a video that you can click and watch right here where I explain everything about this. Now, the fifth and final mistake you should avoid when you start trading is starting too small with big expectations. So I see so many people out there that want to start their trading account with, let's say, $50 or $100 and want to take it up to 10,000, 100,000, 150,000. But this just does not happen, okay? If you look at percentage-wise, I mean, this would be a return of flipping. And they want to compound, this is the word they use, they want to compound this account up to 10,000, 100,000, 200,000. But this just does not happen. And if you see anyone telling you that you can become a millionaire by investing $50 or $100 on your FX account, it's probably just trying to get a broker commission. So be very careful with that. If I had to resume this point, you need to understand that trading is a way to multiply money. However, 100 times 0 is still equal to 0. So you need some money to start. Now, I'd like to know that some people know they have a lack of capital, but will start trading anyways. But they have this end goal in mind, and they are doing this and basically trading this account for something else, to get investors or for future, okay? And in that case, it's totally different, but you need to know exactly what's possible and what is not. So I really hope this video will help you to avoid these very common mistakes when you start trading. Feel free to leave a comment under this video if you have any question, or even message me on Instagram directly if you need guidance or help with something regarding finance or trading. So if you enjoyed this video, remember to slash the like button and to watch my other videos where I talk about finance, trading, investing. Peace.